It'd be nice if we had volume, right? It'd be nice if we had volume. All right. All right. So, yes, my confession this morning is that I already drank my coffee. I've been up since about 4 a.m. We're rocking a Jocko Go this morning, 95 milligrams of caffeine. And now we have sound. All right. This is a much better show usually. I can't say every time. It's a much better show with sound. All right. So you'll notice I have a few notes here in our daily notes that I send out to members. And first of all, index trends. Absolutely. I am still looking at the shorts in the NAS and in the Russell. This is something that we've been doing now for a while. I just need a higher high, bounce to the 21 propulsion, and we are back in business. Do I want to short the Russell? The Lorna Bot and I were going back and forth about Russell shorts. I think she's short the Russell. I think there's a few more aggro setups within the Mastery. They might have shorted the Russell too. But here's the thing. We've talked about this before. What you trade is more important than how you trade it. So if the how is more conservatively, if the how is from a higher high, as long as we're thinking about lower lows and the path of least resistance being lower in the Russell, we are right as rain. And I think a lot of folks are wondering, what does Amazon's 20-for-1 stock split mean? Well, it's great for my mom. My mom's cost basis on Amazon is below triple digits. So great for her. I haven't told her yet that her Amazon has split 20-for-1. But my mom's had Amazon for a very long time. I think she got Amazon I picked it up for her 2 years after the IPO. There is something about buy and hold. There is something about that longer term time horizon. I know a lot of folks ask, Raghee, day trading or swing trading or investing? All three, my friends. We want to embrace and take advantage of the opportunity across all three time horizons. And those of you that attended the webinar yesterday, you know that is now what the Sector Secrets Mastery will be doing. We day trade, absolutely. You get my index HPMRs with the Mastery. Do we swing trade? Of course. That's the heart and soul of the Mastery. And then once a quarter, we're going to get together and talk about what I'm seeing macroeconomically and what that means to moving pieces around in my portfolio. So what does Amazon mean? Not much as far as I'm concerned. What I will be curious about is whether or not this drives XLC to a level that we might be able to short from. But the markets have remarkably not given a rip, literally or figuratively. No rip higher, no cares given about this Amazon. All right. So with that being said, let's jump into your questions. That is what our 20 minutes of caffeinating and dominating are all about. Kicking it off with Anders. Hey there, Anders. Good morning. Love the lecture last night. The lecture makes me feel like Professor Raghee. I like that. What do I tend to use as an exit signal? I may have missed that part. Taking profits is the hardest part for me. That's a good problem to have, my friend. So as far as profit taking, I mentioned the free tools, right? And many of you know about them. Darvis, previous highs and lows, psychological levels. Those are really, the entries are remarkably similar to our exits. Exits are similar to entries. Where are those volume ledges? Where are those support and resistance levels that Darvis has already identified? And so it's very much, where has the market been before? And what was the reaction when it got there? So I will factor in historical volatility to a certain degree, but it does not override price. It actually, we try to complement price with the historical volatility. So if we have a significant move, meaning significant isn't, oh, look at that big candle, but is that candle larger than historical moves, then we might get opportunistic on that based on just the sheer scale of that session. All right, Greg, good morning. Yesterday, my QQQ had on my QQQ day trade. Cool. I was going to go short, but the market wasn't. How was I so off? You know what? Let me let me do this. I don't think you were off. There are days that we just, don't win, but I love that you're looking back at your trades and asking, what could I have done differently? So yesterday I was in the Sector Secrets Mastery Room, and I'm just going to go grab the notes from there. That's one thing that we do in any room that I'm in. A big part of the conversation is going to be keeping notes. This layout that you see here on the screen, this is my layout that I like to use. So here's our Wednesday notes. HPMRs. We got into Rio, actually took profit on Rio. I see some questions on Rio. Sure. We updated our target on our short on Intel that we've had a while. So you'll notice, take a look here, Greg. I didn't do much intraday yesterday. Yeah, we didn't do much at all. So I'm trying to remember, Lorna Bot, what do we mostly do intraday yesterday? Between the webinar and a very full book of trades, it's kind of a blur at the moment. I try to have a very short memory for wins and losses, right? It's served me very well to have that short memory. All right. Yeah, she's going to reply in a moment. We just did the NQ fade. Yeah, so we just faded the NQ to the long side. That's all we did. So Greg, when the Nasdaq sunk down yesterday, we were looking at an oversold stochastic. We were looking at a V-score signal. We were looking at the HPMRs, and we just basically faded that. That was it. That was it. And I think as far as being so off, well, ask yourself, are you shorting into new lows, or are you looking for a neutral market to sink into support? I mean, those are some of the things that we consider when we're day trading in the room. All right. So thanks for the question. It wasn't a big trade, by the way, Greg. It wasn't gangbusters. It was a very quick little trade. All right. Next up, may I ask the difference between CL and BZ? The biggest difference is I don't trade BZ. I'm not interested in anything other than light sweet. So sweet. Oftentimes, it's really the difference between what look in the U.S. It's West Texas Intermediate. That's the way in which we look at prices. That's crude oil, WTI. We also look at Brent. I just don't trade Brent, Jack. So most of your volume and open interest and broader opinion about equity market, about the oil markets in the U.S. is based on CL. So that's what I keep an eye on. All right, Rio. Got a lot of questions on Rio. Sure. So yesterday we did send out an alert on Rio, and we bought it, and it happened to have hit the target that same day. So let me show you something. This is a pattern that I pointed out to the members. It's the kind of stuff that we do in the mastery. And I said, look at the nature of the previous pullbacks in Rio. Now, we bought this one, right? We bought that one right there. And so what I wanted was something that was going to, first of all, go lower and into the lower half of the wave, usually on some kind of gap or some kind of dramatic move, because that seems to be the way Rio moves. Look at this one back in here. Look at the one that we took previous. And then also this one. Rio right now, though, of course, thinking about where Rio does business, why did we have such a close initial target? Why was I so interested in getting out of this, getting in because it's a good setup, but also being very prudent about the first target? Rio does business in Russia, and at any moment we could get news. So the best way to handle that is be very prudent about having a conservative first target, scaling out a half the position. So this morning, I will be, and I've already sent the note out to the mastery members. We're right there at the 200, right? 200 propulsion. You all can get this over at countdowntrader.com. So if we can hold that area, that's actually another pretty decent level to be looking at an oversold buy on Rio. It's not the trend following buy that we already took and then scaled out of, which, by the way, what is my arch nemesis in the style that I teach, in the style that I share? Gaps. Especially when you're overnight trading. Gaps are our biggest nemesis. They're our biggest nemesis, not to entries, because sometimes we enter on gaps. Sometimes that's the ultimate blue light special. They're the nemesis when it comes to risk management and trade management. Now, you might say, what's the difference? Well, at a break-even stop, I'm really not in a hardcore risk management we've already taken profit, we've reduced our size, but we are going to wake up to that half of our trade that's still open underwater. Now the question is it going to bounce from here? That's for question number one. Have we broken our threshold of risk? And it's going to be close. It should not be bone jarring. And the last question is there potentially a setup here? Separate from the trade we already took, but is there validity? And my answer is likely yes, right? Likely yes. But again, remember, the reason that we move lower is that Russia and Rio Rio's cut ties with Russia. They're no longer going to do business there. Boom, gap down. Now, VALE, for those of you looking at Rio, VALE might be a great place to refocus. So just food for thought. But yeah, in Rio, taking profit. And speaking of taking profit, for those of you that did follow me into Intel, we're still in this trade. We're still sitting at an unrealized profit. We need some lower lows. Keeping an eye on that. And then those of you that took Comcast, same thing. We are definitely going to be hitting that target down here today. So be vigilant with all of that. Thanks for the questions on Rio. Okay, next up, Alex asked, when intraday trading and the prop dots appear, are they then used as support or resistance levels? When they're not present, then use the wave. So my preference for using the wave and the propulsion dots are when we're in a trend, Alex. So the trade flags that I give you all, I would want to be in a green or red trend to use either one of those as dynamic support or resistance. If you've got the JT multi, you want that lower row green. This is the JT multi on TradingView, this row here. And then these two, this right here, Momo trend right here, those are the trade flags. This is the multi. They show the same thing. This is the history of what's shown here. What's shown here is the hard right edge. Okay, so the multi is something that's either a premium tool or available in the mastery. The trade flags I make right here, these two, on TOS, I make them available for basically the entire membership. So if you are in one of the main rooms, day trading, futures options, of course, my mastery, go into the room drive and I share my layout on TOS with you all. And that includes those trade flags. All right, moving on. What are my thoughts on Tesla? Ted, mostly what I've been thinking about with Tesla is the short. Now, remember, if Amazon's gapping up, we're going to see a little bit of a high tide conversation. Not that much, but generally speaking, I would want to short Tesla. It's going right into the point of control. It's not something I want to buy, right? Because it's in an overall downtrend. So the idea here would be to short into the wave for sure, and then be really vigilant about taking that initial target, that initial profit. I would say, well, you can see here, the last time we did it, boom, there's your 50% right in here. So if you do take a Tesla short, be vigilant about that 50% of the last major move for the target, right? That seems to be right now the best way to play that. What do I think about Mo and XLP? Well, number one, Giancarlos, I'm in both. We're in both Mo and XLP. We're going to open up pretty much around our entry. So we're not taking any real significant heat here. Again, being patient, kind of what I talked about with Rio, right? You've got to know the personality of the stocks you're trading. The last time we got into Mo was in there. So think about the way in which it tends to pull back, right? This one did something very similar. So I like Mo. I know that Mo got hit hard because when the broader averages, indices, S&P, NAS especially, are strong, nobody wants to get into utilities. And nobody wants to get into staples, which is Mo is a part of. So it's kind of brushed aside for this opportunistic risk on play. I do like Mo. It's still in our zone. So really pretty much status quo there, which is fine. And then XLP is still going to be a little bit under pressure, but again, our zone, again, where you buy is so important because it dictates how much heat you're taking. Our zone was basically between those two green lines. We're opening up lower, totally acknowledging that. But again, this is where we realize that our journey into a trade isn't that we buy and then everything keeps going higher. I wish that were the case. But in this area here, to ask myself, as a percentage of my account and as a percentage of premium paid, am I past that paper cut threshold? Right. And with this move, we won't be. With this move, we won't be. We look for paper cuts. We take small losses. In fact, when I was walking you all through the do I have this up here? Yeah, I do. Okay. So I try to update my Wingman about once a week. So that what that means is you go into Thinkorswim or whatever platform you're on, and you download your account, your trades from your account, and then you upload them into this thing. Why do I like doing that? Because it shows me a really ruthless view of what I've been doing. It shows me a really, really clear view of, okay, Rob, we've been doing mostly long calls. Isn't that funny? In an environment where everyone says you can't buy the dip, we have absolutely been slaying it buying the dip. Although we've been shorting some rips as well, but I've been mostly long calls. So this is a good eye opener. Ron, you are by a factor of almost 3, focusing still on the long side of many, many markets. Okay, gives me an idea. Make sure that I'm going to remind myself. Make sure you're keeping an eye on those short opportunities. I might be maybe missing some there. You can see how lopsided the book is to the long side. Okay, so that's one thing that just looking at the P&L on your account statement is not going to do. The next thing is I can start looking at how this is the dot plot for a trader, right? I don't want to see a lot of home runs. We've got a couple of them, but I don't want to see a lot of home runs. Partially, this is all the exposure that we have to energy, right? That's what that is there. So it's not that I'm loading up at all. It's just that these happen to go. In fact, one thing I want to mention is every single one of these trades has within, I'd say, $500, the same budget. In other words, we spent the same amount of money buying options for every one of these trades. We do not vary our bet size. I do not recommend that at all, right? So what does that allow us to do? Well, we don't presume that one trade is going to be the winner and another one is a lower probability. Why would I take that anyway? So fixed bet size is really important. By the way, the budget in this particular account is approximately $3,500. So a couple of them might have been 36 or 38, but for the most part, this is how many dollars worth of options we're buying. This is AKA known as budget, right? The budget. So, the paper cut in this case, Giancarlo, that MO and XLP might end up as one of the paper cuts on my book, but right now we're still within the threshold of this still being a trade that we'll give a shot, right? So we keep an eye on the risk to the account. We keep an eye on the risk of the premium paid. And so right now, I think I'm going to just let them do their thing. I know that if risk aversion, weakness in equities, specifically the Nasdaq and the S&P return, we'll be seeing strength back in those, largely defensive corners of the market. All right. So next up is, and Q, I hope that gives you a little bit idea of scaling and risk management. We're scaling in with different triggers, and then we're putting a specific stop for each trigger, which means that there is a point in the life cycle of a trade that I might find I've let go the aggro trigger, but I still have the moderate and the conservative. So I'm not getting flat. We're scaling out with risk as much as we're scaling out with reward. So that just gives you a little bit of insight there. All right, next up, have I altered my position size given the recent market conditions, or do I always maintain consistent size regardless of market conditions? Kevin, when our VIX is a little bit punchy, I will consider slightly smaller size, but not significantly so. Not significantly so. But yes, what I'll usually do, Kevin, is we kind of ratchet up the discernment. In other words, I'm going to focus a little bit less on aggro and a little bit more on conservative. We're going to be far more strict about the quality of trends. We're going to be far more strict to the adherence to trades that have both a macro trend behind them and a technical trend behind them. So there are adjustments for sure that I will make. And you're exactly right. Those are two that I'll make quite often. All right. Okay, gang, as always, thank you very much for caffeinating and dominating with me this morning. The replay for yesterday's talk is over at simplertrading.com/timeless. Love that. Timeless-replay. Leave your questions, leave your comments here at the Simpler Trading YouTube channel. Smash that like button if this content's moving you in the right direction, if we're moving the needle for you. And if not, let me know how we can. Let me know what I can do to make this 20 minutes well worth your time, because I always want to respect that. Be good to each other. I'll see you tomorrow.